Now, the next thing, and probably one of the most obvious ways that wealthy people are avoiding taxes, is through depreciation. I speak on depreciation more than any other thing on this channel because most taxpayers can obtain depreciation the quickest before focusing on income. 3, 2, 1. Now, many of you guys are probably aware of this. The second and probably one of the biggest ways that rich people avoid taxes is through depreciation. But depreciation is a tool that the wealthy are receiving from buying the right type of real estate. Anytime that you buy real estate, you're given depreciation for the wear and tear of your residential or commercial property. The IRS will allow for you to perform strategies to accelerate depreciation on your tax return that can create what's called a paper loss. If you have a paper loss on your returns, the paper loss could, if you do things the right way, offset your W-2 income or offset your 1099 income. Last but not least, and one that probably many don't take into consideration, is tax credits. Yes, wealthy people are investing for tax credits, and they're investing in things that most traditional taxpayers are not investing in, which includes oil and gas and which includes solar. When you invest in oil and gas, you are going to receive tax credits and depreciation deductions depending on what type of oil and gas investment that you're getting into. I would highly encourage that any of my followers go and watch my videos on oil and gas investments and really study the working interest part of investing in oil and gas. This can turn around and give you massive tax savings that you can receive in the same year that you make the investment. How about film credits? Did you know that as a business owner, you can invest in the film? What if you're not a business owner? You can also invest in a film. By investing in a film, you can receive a film tax credit. And sometimes these tax credit ends up giving you a multiple relative to the amount of money that you invested. I had a client last year invest $100,000 into a film, and he received a $400,000 deduction after the film tax law was applied to his tax returns for 2023. These are some of the many ways in which rich people and wealthy entrepreneurs are investing and reducing their tax bill and shifting income off of their tax returns to reduce their tax bill. And guess what? You have the ability to do this all. My team would be more than happy to see how we can best serve you in the tax planning space.